Good evening, everyone. Bonne année, Happy New Year, Feliz Año Nuevo. Pretty much Happy New Year in all languages and cultures, whether it's the year of the rabbit, the cat, or just 2023 for you. Welcome to the first webinar for 2023. And I'm honestly not quite sure when it's socially accepted for me to continue saying Happy New Year, if I should stop February 14th or the end of January. Now, as I was preparing for today's discussion, the concept of time came to mind because we will be going back and forth along the timeline, looking back into history a bit and then forward into the future. And time is an elusive concept that escapes us. And we usually find ourselves surprised at how much time passes quickly. Now, it's been over a decade since the iPhone was launched, and it's paved the way for many changes in how we live and relate with each other. And if you think back to the transition from horse and buggies to automobiles, which not only affected how we travel, but resulted in development of highways and suburbs, because now we could live minutes or hours from work in the burbs with a highway to travel on. So at various intervals in time, things are happening around us, behind us, under our noses, all the time. But we also find ourselves with busy demands on our time, and that makes it easy to sometimes miss some of these things until it's mainstream and, dare I say, too late. So tonight, Jacqueline's going to shed some light on some key trends that are taking place. And as always, I try to keep a very tight schedule, an agenda, and I'll do a bit of an intro and then introduce Jacqueline, and also a bit of a small poll just to help her get a sense of who's in the audience. And then when she's finished her segment, we'll go into the Q&A. And then I usually hang around for a few minutes for any questions that people may have. If we don't get through everything in the time that we've planned for, then I invite you to keep an eye out for the evaluation that we'll send out after. You can highlight anything in particular that you want to do a more deeper dive conversation, and I'll be happy to facilitate that. If you are joining us for the first time, my name is Orlando Lopez. I am an investment advisor, financial planner with RBC Dominion Securities. I've been with RBC now for over 3 years. Time has gone by quickly, and I'm coming on to 3 years in doing these webinars. Very first webinar was in March 2020, just when COVID, resulted in the lockdown. I transitioned from seminars to webinars, and I've continued to host them because of the importance of closing the awareness gap within the community. And I happily do this for clients of mine that join. That's my way of also kind of helping them to keep up with things. And if you are not a client, you're part of the community. What I do is really helping people navigate life stages, navigate their finances with my own knowledge and just the resources at my disposal within RBC, and just a career that I've established networks and connections across the industry. So it's always a privilege for me to be able to share what I continue to learn with you in this sort of setting. So the poll that, to kind of, like I said, got a number of people on the call and wanted to sort of, see where your focus is, which of the topics, which of the trends might be of most interest to you. And that might also steer Jacqueline into where to put most of her attention. So if you've got a cell phone, you can take a picture of that QR code, or you can go to slido.com. And once there, can input that number for Slido. So you'd see it here as well. And the first, hopefully you've already taken a snapshot of the QR code. And this is the first question. Which of the following megatrends are you most excited about? So technological breakthrough, demographics and social change, rapid urbanization, climate change and resource scarcity, and the final one at the bottom is emerging global wealth. Which one of these are you most excited about? That a little bit. So 60% so far for breakthrough. Tech is always the sort of the exciting, the shiny object in the room is always technology. And one interesting one, people are still voting demographic. I'm not sure if one saw that China for the first time is seeing a reduction in their population. So, they've always been famously known as the larger, most populated country. Behind them was India, and things are shifting. They are going to surpass, India's going to surpass China likely. And that could create a shift in things, opportunities might shift, and there might also be risk as well. The next one is, out of curiosity, if you had to sacrifice something for 1 week, which of these would you sacrifice for 1 week? If you had to choose one of them to sacrifice for 1 week, which would that be? Dessert, cakes, ice cream, or you could sacrifice for 1 week, no alcohol or no cell phone, no smartphone. Which could you do without for 1 week? Nobody likes dessert. Got 67 and 33. Right. So, Jacqueline, hope that will help both of those two questions. And I it's definitely it's the second time that I am doing a webinar with Jacqueline. The last time was back in 2020. Jacqueline is with BlackRock, which is one of, if not the largest money managers in the world. You can correct me or clarify, but I definitely up there. And RBC's got an established partnership and a relationship with BlackRock. We're fortunate to have that, and fortunate to have the ability to leverage your knowledge, your research that BlackRock does and has sort of access to. And I truly appreciate that. Truly appreciate you taking the time to share your knowledge with us tonight, Jacqueline. And I will quickly get your slides up, and if wonderful, there we go.
Thank you, Orlando, for the really kind introduction, and I'm very excited to be here tonight. And I apologize. Like technological breakthroughs, I did not have one this evening, and my video, when I turn it on, has a giant green box. So I apologize. I will spare you the glaring green box, and I will do this audio only. So, our presentation tonight is entitled Megatrends Own the Future. And tonight's presentation is really going to focus around 5 long-term transformational forces that have the power to change the way we live and work. And through this discussion, we'll also uncover growth potential and investment strategies of Megatrends ETFs that are shaping the future. So I think a great starting point for this evening is to really distinguish what is a structural and what is a cyclical trend. So cyclical trends are short-term in nature and often last days, weeks, or at best months. They are driven by single factors or single catalysts. Examples could be a rise in healthcare, rise in the healthcare sector based on medical legislation, or a change in the price of commodities like gas due to inflation. These trends often rise quickly and fall quickly. So timing these trends is very challenging. Structural trends are long-term in nature and take years to play out. They are driven by multiple catalysts from societal shifts. So examples of this are government regulation, technological and economic advancements. So structural themes are so powerful, timing them isn't necessarily as important. We really have to keep our eyes open as the trends that are changing the world around us are in many cases already here. So if you want to move on to the next slide, I will actually briefly define what is a megatrend, because I think many of you guys, when you signed up for this presentation, were wondering, what is a megatrend? So megatrends are structural by nature. They are long-term cultural, technological, and social forces that have the power to change the way we as individuals live and work, but also how businesses and governments operate. So at RBC iShares, we've identified 5 megatrends: technological breakthrough, demographics, social change, rapid urbanization, climate change and resource scarcity, and the last one being emerging global wealth. Each megatrend gives access to multiple sub-themes. So for example, electric vehicles and renewable energy are both working to combat climate change. Cybersecurity and AI are both working to support, the megatrend of technological breakthrough. So before we talk about the future, I think we need to go back and think about some of the significant structural changes and innovations in the last 100 years. So if we move on to the next slide, at the start of the 20th century, the most common type of transportation was horse and buggy. And as many of you know, Henry Ford changed all that. His famous quote was, if I were to give people what they wanted, I would have given them a faster horse. But in reality, he didn't give them a faster horse, he invented the automobile. And moving on to the next slide, we'll see that it actually took 25 years for the horse and carriage to become entirely extinct. So as an investor, seeing the car for the first time, it would have been really difficult to imagine that that car or that investment had the potential to change everything. But within that realm, how do you really know what companies are ultimately going to prosper? So does anyone want to guess how many car companies went out of business during that time? So maybe I'll put Orlando on the spot because I think I can't unmute the audience. Okay. Orlando, how many car companies do you think went out of business at that time?
10.
10?
Yeah.
So the actual answer is 1,000. And the vast majority of these companies shut their doors in the 1920s. So if you think about it, there's a lot of bad investments. But we know and are familiar with Ford, GM, Michelin, and Goodyear. These are the firms that survived and created the infrastructure for the cars that we still drive today. So if we move on and move further on in time, we think about post-World War II and 1946. At that time, only 1 in 10,000 American households had a TV. 12 years later, it only took half the time. 4 out of 5 American households owned a TV. And I think most of us in our homes own multiple now. And if we move forward into the future, we think about the TV. The winning companies in this case were not really the TV manufacturers. They were content providers, so NBC, ABC, CBS. This trend was powerful and easy to spot, but the investment implications were complex. And if we move to more current examples onto the next slide, so it took 25 years for the automobile or the car to become mainstream, 12 years for the television. And at the start of the 21st century, it only took Facebook 4 years to hit 100 million users. And more recently, those who are, I would say, cool enough or young enough to know TikTok, it only took 2 years to reach 500 million. And if there's anyone out there with kids, I think they're very familiar that TikTok has taken the world by storm. So the increasing rate of technological innovation and adoption means that long-term structural opportunities are playing out today in a shorter time span, and we would argue a more investable time frame. So structural change occurs over time. And I think many of you signed up for this presentation today expecting a presentation on investments, on portfolios, and on products. I promise we'll get to those, but we couldn't really talk about investing if we don't talk about the long-term structural change that's really happening today. So if we move to the next slide, the world is constantly evolving. So if you think about what we all endured in March of 2020, we all endured a global pandemic. And for many of us, or I would say the majority of us, that was the first time. As a result of that, there were many, many changes. I think the one that we're most familiar with was, many of us experienced the FDA's first approved mRNA vaccine, as well as a significant shift towards remote and virtual work. I think for the majority of us, spending 5 days at home and being able to work from home, as well as, in many cases having to do homeschooling, with kids having virtual learning, that was a very new experience.
A nightmare.
As we talk about change, oftentimes it presents what I call a Goldilocks problem. So the issue is that the trends of tomorrow are really easy to spot, but investing them has been really tricky. So if we move on to the next slide, many of you are familiar with the FANG companies. So that's Facebook, Apple, Amazon, Netflix, and Google. These are some of the best performing, well-known, innovative firms in the last 20 years. I think if we all wish we had a crystal ball about 2 decades ago to tell us to invest in these names, unfortunately, that isn't really the case then, and it isn't really the case now. So I want to kind of encourage everyone to think about trend investing. So I'm suggesting or getting everyone to think about taking a megatrends approach that allows you as investors to get a diversified access across a range of different companies, regardless of geography, sector, or size. And these companies are ultimately best positioned to benefit from a particular sub-theme. So ultimately, this will reduce risk. And I'll go through an example of why a megatrends approach would be the right one. So if we move on to the next slide. So let's take a deeper look at why single stock picking can be challenging when it comes to trend investing. So if we go back to the 1990s, I think we could all agree we saw e-commerce coming. There was more online shopping taking place year after year. People were shifting their preferences from shopping in brick and mortar stores to buying things online. But how did this opportunity play out for investors? So the answer is it depends. So if we take a look at this chart, you'll see the performance of 2 e-commerce companies. You'll see that the e-commerce company, that there was company A delivered 213% return. And I argued everyone would say that they would want to be invested in that company. Company B delivered 22% return. In reality, one of these is a company that is a seller of toys, and the other is a seller of books. Both are in the e-commerce sector. If we move on to the next slide, you'll see that, I don't think it's a secret, the company that is a seller of books was Amazon. So from 1999 through to today, Amazon delivered approximately 45 times return on capital. The other company that eventually filed for bankruptcy was eToys, so essentially returned nothing. My point is, it wasn't obvious to select the winning stock or the winning company, despite the fact both of these companies are e-commerce companies at that time, and both of them were doing really well. And, who would know at that time that Amazon would be the dominant seller of absolutely everything? I think most of us can attest to, especially, coming out of this pandemic, we have more Amazon boxes arriving at home than we've ever had before. So if we move on to the next slide, and many investors would say, okay, Jacqueline, I understand e-commerce is an area that we feel very strongly about. I can access that through a broad benchmark. Maybe use the NASDAQ, which has significantly more tech exposure than other broad market benchmarks. So this shows the return of the NASDAQ over the same 20 years, and you would have received 5 times your money back, which is a very respectable return in 20 years. But if you want to get more specific and granular, we'll move on to the next slide. And we'll see that if you invested in the MSCI Internet and Direct Marketing and Retail, which is highlighted in the green line, you would have received 28 times return over the same time period versus 5 times. So this is an early example of Megatrend style index investing. So it reduces the risk of single stock picking, and broad market indexing is too broad. So it really allows investors to really hone in on the trend. So if we move on to the next slide. So as I mentioned earlier, you have 28 times versus 5 times return. So the reason why there's that big difference between using a Megatrends index or a broad market index is the fact that in broad market index, Megatrends, or e-commerce in this case, was a really small portion. So the trend was easy to spot, but investing in it was a lot more difficult. So if we move on to the next slide.
So the broad market was just too diluted, in other words. Like,
yes,
it was just
exactly. It was too diluted.
Got you. There were winners were included in that, but the losers dragged it down. Yeah.
Exactly.
Return.
Exactly. So, how do we spot trends? In reality, they're all around us. They're on the front page of the paper for those who still read print. They're on Twitter. They're on Instagram. They're all part of our daily lives. So I'm going to use the example of self-driving cars. So every one of us has thought about how self-driving would impact our commute. I think many of you guys and many of the people in the audience have resorted to, being back in the office, and how nice would it be to have a self-driving car drive you across the Gardner or the DVP every day? But what would that mean for rideshare services like Uber or Lyft? And what implications could it have on our infrastructure? So if we go to the next slide, my question to ask the audience is, do you think there'll be more self-driving cars on the road 10 years from now than there is today? The obvious answer is yes. The reality is we don't have to be a futurist to spot the next megatrend opportunity. So, how do we spot it? So if we move on to the next slide, we've identified the opportunity, but how do we as investors separate what is truly a megatrend versus a fad? Megatrend opportunities have 3 commonalities. They're pushed forward by regulatory, societal, and economic forces. So in my next slide, I'll go into a little bit more detail. So let's start with the regulatory example of electric cars. So in China, the government now requires car buyers to win a lottery system to actually purchase a gas-powered vehicle. There's no such requirement for electric vehicles. So the buying behavior has shifted dramatically in just 1 year. So as a result, China is the #1 market for EVs worldwide. And these regulatory changes are not just limited to Asia. In Europe, they're aiming to reduce total emissions by 50%. In the US, clean tech and EV infrastructure is getting a major boost. So the governor of California last September signed an executive order requiring all new car purchases to be emission-free by 2035. So if we move on to the next slide, let's look at some societal changes.
So then,
or I should say societal forces.
So Jacqueline, trying to fight regulation is almost synonymous to trying to fight a tsunami. Good luck. It's gonna bowl you over eventually, right? It's
yes.
There's only so much you can do to fight regulation.
Yeah, I also think with regulation, I know that, a lot of people say it really does depend on politics, but in many cases, whether, it's provincial or state regulation or national, the shift towards, EVs, the shift towards even something like plastic, the ban on plastic, single-use plastics, those are examples of shifts that we've all seen for a long time. I mean, how many of us go to the grocery store and we're so used to them asking if we want a bag? I think in a week, they'll be no longer asking us for bags because they no longer offer them. That shift towards, that's a very big, I would argue, regulatory as well as a societal shift.
Yeah, it's a big wave that you either ride the wave or get out of the way of the wave sort of thing, because it's going to knock you.
Yeah, exactly. So if we think about, the pandemic that we've all endured, telemedicine became a lot more common. So the Mayo Clinic, which is one of the largest and most renowned clinics in the US, now conducts more telemedicine visits per day than they did in the entire year of 2019. So it's really, changed the way, people view doctors. So, this is really critical in supporting the aging population. So it's estimated that a single medical practice can save patients approximately $3 million in travel costs in the time span of 9 years with offering telemedicine. And it also saves patients approximately 4 hours a year in travel time. So, more and more patients are leveraging services like telemedicine as an example. And the last one is economic. So I think, we have now gone through what we call a work revolution. Automation and AI are really redefining how global employees and businesses define work. We have, more than half of the internet traffic going through our mobile phones. So, digital technology is going to increase and enrich our relationships with our jobs and makes us more accessible anywhere and everywhere. So I've talked about a range of topics, and, all the megatrends really are propelled by the convergence of regulatory, societal, and economic changes. So, I'm going to spend a little bit more time going through the megatrends on my next slide. So Orlando also defined them very clearly in his opening remarks. So the 5 megatrends, so technological breakthrough, this is pure play tech themes. Tech plays a role across all 5 of these megatrends, but we're talking about the innovation that's happening today. So think robotics, AI, demographics. So in reality, the world is aging. So in 10 years, there will be more grandparents than grandchildren. So what I mean by that is more people over the age of 65 than under the age of 18. Urbanization. So in the developing world or emerging markets, mega cities are coming up, everywhere. They're growing to millions of people in population overnight. In our developed world, we need new infrastructure, that is going to be ready for the 21st century. So in the U.S. alone, there's $2 trillion of unmet infrastructure spending required. So when I think of, urbanization, it means more highways, tolls, bridges, so we can get, in and out of our cities faster and more efficient. Climate change. This is really about companies on the cutting edge of green innovation. So think clean energy, electric vehicles, renewable infrastructure. And lastly, emerging wealth. The emerging wealth of the middle class consumers is rapidly growing. So in places like India and China, there are 1 to 2 billion people entering the middle class who have disposable income for the first time in years. So moving on to the next slide, let's explore some of the megatrends in a little bit more detail. So if we go to slide 27, so one slide over, I think it's really important to emphasize with this megatrend how influential society is when it comes to technology. So in Orlando's opening comments, he asked you a polling question. What would you sacrifice for a week? Would you choose your smartphone? Would you choose dessert or alcohol? So maybe alcohol was a little lower because it's January and perhaps some of the participants are doing dry January. So I'm going to reveal the answers. So if we want to go to the next slide, in a digital survey, it said that 49% of people would rather give up dessert, 74% of people would give up alcohol and over their smartphone, but actually 44% of people actually said they'd rather give up seeing their spouse in a month to keep their phone for that month. So I would argue, we all spend a lot of time on our phones, maybe a little bit more time than we should, but I think that, when we think about this, the societal shift and this consumer preference to having a smartphone, I think that megatrend is definitely here to stay.
So give up spending time with their spouse for a week, right?
A month.
Oh, a month. And then, if you have access to that data, can you check if my wife answered that survey? Hopefully she didn't. I'm curious how she voted. I'm just kidding.
I think you're safe on that one. But I think that, the true message is that, who would have thought, 10 years ago, 20 years ago, that we could be able to do so many things on our phones. I think, if we're leaving the house in the morning, I think everyone in the audience could agree, if they leave their home and, they grab their cell phone and it's not in their bag or in their pocket, there's a sense of anxiety or panic. And the majority of people would have to go back to get it because it controls everything from calendar to email, but even, apps to order food, Apple Pay. I think, we all can recognize that, a mobile phone is a lot more important than, I would argue, the cordless phone that some people may still have as a landline.
Or your wallet. You can probably leave your wallet and be like, oh well, whatever. As long as you didn't leave your phone, right? It used to be a
Exactly.
big deal if you forgot your wallet, like how you can't go on the road without your wallet. But it's not as much. Like, I think the phone is a more important one to not leave at home.
Exactly. So if we move on to the next slide, on that same topic of phone and connectivity, so, we fast forward to today, and there's the whole rise of the Internet of Things. So there is actually 30 billion internet-connected devices right now. In 5 years, that will grow to 75 billion. So I'm looking at my desk here at the office, and I'm staring, and I probably have about 6 internet-connected devices just within my fingertips. So as a result of that, 90% of the world's data was created in the last 2 years. And AI is becoming essential to parse through that data. And as a result, it's expected to generate $3 trillion in value for businesses globally. And only approximately 15% of companies are using AI to parcel through this data. So with more data, more connectivity, there is the need for, in many cases, more cybersecurity. So I think, we've all been victims in some ways to whether it be, an email hack, social media hack, or even, mysterious text messages saying you have parcels that require fees. In reality, cybersecurity is more and more of a risk. And only 16% of risk executives worldwide say that their company is prepared for cyber risk. So in reality, that number needs to go up as with greater connectivity. So if we move on to the next slide, the pandemic has changed and fast-tracked many things. So, many executives globally say they plan to offer more virtual work or flexible work post-pandemic. And it's not really just about our working lives. We have 76% of individuals are more comfortable and interested in using telehealth options than they were previously. And it's not just, medicine and work. More customer interactions are being done virtually. So 58% of customer interactions are occurring virtually. That's up 61% from pre-pandemic levels. So that's really, really emphasizes the changes we've had from a societal standpoint. And then moving on to the next slide, this brings us to our first mega rule. The mega rule is wait for tomorrow. So as we continue to survey megatrends, I want to take a few opportunities to illustrate how megatrend investing works. So let's go back to the 2000s again. And, at that time, none of the FANG companies were represented in the S&P 500. In fact, there's only one firm, and it's Microsoft. They held a position 20 years ago in the S&P 500, and they still do today. So for the 20-year time span from 2000 to 2020, the 5 market leaders, being the FANG stocks, they made it into the S&P 500, and they actually represent significant weights in indexes as well as many mutual funds. And I want to encourage you guys, everyone in the audience, to move away from the FANG mindset to focus on trend investing, which means allocations to smaller companies, specifically those positioned to take advantage of the megatrends. And think about things like AI and cybersecurity. These have the potential to be the next mega cap winners, so essentially the next FANGs. So at RBC iShares, when we invest in megatrend themes, we avoid putting our holding, we're not putting holdings in large companies like Microsoft, Amazon, and Apple, because we know they're already well represented in your portfolio. So if we move on to the next slide.
And before we go on, I just wanted to, when I'm looking at 2001, and I think myself included, didn't have the imagination to consider that ExxonMobil could be a company that be impacted, because it was such an essential thing. Like, everybody, you need gas. Like, there's no way that anything can replace gas. So it's, I guess we have to then say, what is it that we can't even imagine, right? That will evolve over time. Again, uh, these undercurrents, these trends that continue to change.
Yeah, absolutely. And if we think about demographics and social change, and we jump one slide over, you know, I mentioned the fact that there's going to be more grandparents than grandchildren. So the world is getting older. And, you know, that's not just specific to, you know, any particular region. It's not limited to the US. So worldwide, in the next 10 years, there'll be 1 billion people crossing the age of 60. So as a result, healthcare spending has to increase. So in the US, we're expected to spend $2 trillion in healthcare. And, you know, with that comes more money in R&D in terms of medical breakthroughs. So something that, you know, we may be familiar with in the audience is genomics. So, you know, right now it costs $1,000 to have your individual genome mapped. So that way a doctor can prescribe preventative treatments based on your personal genetic makeup. 10 years ago, the same procedure cost $10 million. So, you know, that's significantly cheaper. And at the same time, using immunology, so using their own immune system to fight disease has really enabled some groundbreaking treatments within cancer and other chronic illnesses. So, you know, if you know, especially in the US, there are like health clinics that you can walk in and within an afternoon, you can have your genome mapped. It's pretty amazing. So, you know, I think it's really important to talk about the increased spending in terms of things like, you know, within, you know, medicine as well as biopharma. You know, I think that, you know, we've all really experienced some medical breakthroughs as we lived through this pandemic. If we think just about the mRNA vaccine, it was it was not just revolutionary from a medical standpoint, it was also the speed to market. It was one of the fastest approved mRNA vaccines, you know, ever. And, you know, I think it really speaks volumes to the fact that we're in the early stages of genomics and immunology. So moving on to the next slide, rapid urbanization. So rapid urbanization is about megacities. And, you know, if we jump to the next slide, the reality is the majority of the population in the world, they're migrating to cities. Yes, through the pandemic, we had some migration of people to the suburbs, but it's not just about skyscrapers and condo buildings that you would see downtown. Really, it's about, you know, infrastructure like roads, bridges, sewer systems, tolls, et cetera. So if we think about, you know, we look at Shanghai and Delhi, which are two very rapidly growing cities, they're expected to grow, you know, by 7 million and 10 million people in the next 10 years. And approximately 3/4 of the world's population will live in cities. So that's a tremendous amount of need for infrastructure. So moving on to the next slide, and if we think about an investment in infrastructure, if we make $1 billion investment in traditional infrastructure, that can support 13,000 jobs. But I'm not just talking about traditional infrastructure. I'm actually also speaking about digital infrastructure. So we're thinking about, you know, the migration globally to 5G. There's still over 160 million Americans that don't have reliable access to broadband internet. So, you know, that's also another infrastructure that, you know, is very viable is digital infrastructure. So moving on to the next slide.
The digital highway then, pretty much.
Digital highway, climate change and resource scarcity. So, you know, we're talking about companies that are at the cutting edge of building a clean, green tomorrow. So we're not talking about screening out polluters, we're talking about owning innovators. So, you know, if you think over the last decade, solar has gotten more efficient, wind has gotten more efficient, and batteries are now 73% cheaper. And if we think about, you know, solar panels, wind turbines, technology has evolved significantly that it doesn't necessarily have to be sunny or windy for them to be productive. So there's been some really large renewable projects globally. There's been a $43 billion wind farm off the coast of South Korea, $34 billion wind farm in Norway, as well as in the US, they approved a large wind farm just off the coast of Massachusetts. So, we're seeing an acceleration and adoption towards, renewable energy as well, and the infrastructure associated with it. If we move on to the next slide, there are two immediate drivers of this megatrend. One is, President Biden. He recently introduced a infrastructure bill focused on, electric vehicles, as well as, subsidizing infrastructure builds for climate change. In reality, there are near-term political and economic drivers, but in reality, if we think about, I think Orlando referenced ExxonMobil 20 years ago. If you asked ExxonMobil 20 years ago, would they be thinking about renewable energy as part of their business? They'd probably say no. But if you ask ExxonMobil today, likely renewable energy is part of their business. So if we move forward to the next slide, it brings us to our second mega rule, and that is look for portfolios that connect the value chain. So we talked earlier about the car replacing the horse and carriage. And, when we think about, the cars evolving, when it comes to something like electric vehicles, many of you would just say to me, Jacqueline, electric vehicles, a great way to invest them is to buy Tesla. But in reality, there's other firms within the value chain. There's NIO, which is Tesla's Chinese counterpart. There's also Infron, which is the maker of electric vehicle batteries. There's also lithium, which is in those batteries. So I'm going through this example with electric vehicles because, accessing the entire value chain is essentially very crucial when it comes to megatrends investing. So megatrends are powerful and they affect multiple sectors, industry, and business lines. So when we invest in them, we want to seek exposure broadly and in a diversified basket. So moving on to the next slide, I want to touch upon lastly is emerging global wealth. So if we jump forward, wealth is emerging everywhere. So in China, for example, they have two new billionaires a week, I should say. And, that's not just specific to Asia. We have, 44 people escape poverty every minute in India. And as a result of this emerging global wealth, that has significant implementations for not just areas like e-commerce, but, we think financial institutions and, payment systems. And, these people are going to be having disposable income for the first time. And if we move forward, we think about, onto the next slide, we think about all these people with more disposable income accessing the internet. So, accessing the digital economy, accessing online banking, and this has huge implications for not just technological breakthrough, but a number of sectors and companies across that value chain. So moving on to the next slide, it brings us to our final and third mega rule. It's called thinking beyond borders. So, I encourage you to be flexible in megatrends investing and go beyond single sectors, single stocks, and single borders. So if we think about internet adoption in China, China and India, I should say, have 4 times the population of the US, and they have 3 times the amount of internet users. So currently, not everyone in China has access to the internet. But as a result, there's going to be 600 million new consumers using e-commerce in China versus, that's less than a tenth in the US. So these numbers are pretty staggering. But when we think about investing, most of our portfolios in Canada have a home country bias. And that's great if that's your intention. But when we think about accessing megatrends, we want everyone to think globally and look beyond borders. And moving on to the last slide, this is just a recap of the 5 megatrends we've illustrated today. So technological breakthrough, demographics and social change, rapid urbanization, climate change and resource scarcity, and emerging global wealth. And lastly, I want to recap our three mega rules on the next slide. The first is wait for tomorrow. Build each megatrend allocation without over allocating to large, established tech names that are already represented in your portfolio. Second, connect the value chain. So don't just pick the obvious companies, think about the entire ecosystem. And three, think beyond borders. Don't let home country bias in your portfolio hold you back from realizing real growth potential in companies globally. And if we move on to the next slide.
And a quick question, Jacqueline, is the play on words, wait for tomorrow, is it allocating a bit more weight in your portfolio towards the megatrends? That's sort of the play on words, the weight for tomorrow?
Yes,
Okay.
you caught my pun. It is allocating more weight to megatrends because, you're established, what I call, tech companies that don't necessarily have as much exposure to megatrends already in your portfolio. And if we jump one slide over, so I think, at this point, everyone's asking, okay, so, Jacqueline, I hear what you're saying. I'd like to invest in megatrends. So, I likely like to close my remarks today with just sharing with you RBC iShares. We offer a suite of Megatrends ETFs to help you benefit from the 5 megatrends. So we have XEXP, which is an exponential technologies ETF. We have XHAK, which is cybersecurity and tech, XDNA, so genomics, immunology, and healthcare, CIF, which is infrastructure exposure, XCLN, which is clean energy, CWW for water, and XCH for China. So with that, those are all my prepared remarks, but I'd love to take questions.
Yeah, thank you, Jacqueline. Thank you. It's a lot to take in, but important stuff in my opinion, and I will open it up for anyone that has a question for Jacqueline. All questions are welcome. So I'm just gonna quickly keep an eye to see if there's a raise hand feature that you can, I'll be able to see, and then I will to. So let me just quickly, okay.
Oh,
I'm gonna unmute.
Orlando, I see a question.
Yes, I'm going to unmute. Monique, welcome.
Great question, Monique. So I would say if you're looking to capture a catch-all or capture exposure across the 5 megatrends we spoke about this evening, I would say the exponential technology would be the one that that would fit that. But that being said, I think when you kind of look at your own portfolio and how it's built currently, I would, think about, which megatrends, maybe are you most interested in, maybe allocating across maybe more than one ETF, really kind of depending on the risk tolerance of your portfolio and what you currently hold. But the one that would capture kind of a little bit of each would be the exponential technology.
Okay, thank you.
You're welcome.
Thanks for the question, Monique. And I'm going to unmute Jacqueline.
Absolutely. So the ones designated with the yellow bubbles, those particular ETFs were launched in Canada in May of 2022. Okay. But that being said, iShares is the largest provider in Megatrends ETFs globally. So we've had these strategies in the US previously. And then infrastructure, water, and China have been in our lineup for a lot longer. So what I can do is I can have Orlando follow up with you, Jacqueline, and send you the returns to take a look at.
Thank you for the question, Jacqueline, and for joining.
Oh my.
And let me see if there's any other. We still have some time. There we go. Yep, we've got one. Hi, Suzanne. Welcome.
Yeah, so I think this part of this is I'll answer, and a part of it I'll pass it over to Orlando. I would say that sorry, I'm not sure if Orlando, can you still hear me?
Yeah, I can still hear you. Yeah.
Okay, perfect. Because I was hearing a kickback, so I wasn't sure if you could still hear me. I would say the answer to that question is, I think in Canada, I can understand that, many of us are comfortable investing in Canadian companies. But when we speak about investing globally, there are lots of companies in the US, based overseas, that have innovation that we may not necessarily have here in Canada. But that being said, there's also Canadian companies that derive revenues and, have business units globally. So it's really about, when you look at your portfolio, remaining diversified and not having too many biases one way or another to really achieve your investment goals. Maybe I'll pass it off to Orlando at this point to kind of speak a little bit more about that.
I'd be really happy, because this is a common observation, and it really comes down to that human element where familiarity gives us comfort. And what I usually highlight, that concern for global exposure is the same kind of concern. Like, a Canadian will be very comfortable to invest in the banks that they know, right? So investing in RBC, stock, TD, BMO, the financial sector. You may have somebody who lives in Australia who would be terrified and like, well, I would not, invest in global banking stocks, So would they be missing out on an opportunity by not investing in the strong Canadian banks, right? Or that we are here, we may not be investing in banks in the UK. So the same sort of thing applies, but we would look at it to say, well, don't know what you're missing. These are strong institutions, right? So we have to be aware of those biases. And even though it might be overwhelming to then fully navigate it on our own, that's where that collaboration comes in, right? So collaborating is the most efficient way, I find, of navigating these realities. So the expertise of a BlackRock, that's my approach. I focus on a lot of team approaches and leveraging the resources and the experts, because one person is not going to do it as well. Orlando alone won't do it as well as a team that's at BlackRock, a team at that focuses on it. So that's sort of how I'd answer that element. That it's, don't necessarily let the comfort or the familiarity that comfort brings exclude you from certain opportunities. And I'll be happy to sort of, help you to sort of explore that in a little bit more depth. And but I just noticed one more question from Alethea that I'm going to unmute.
Exactly. Yes.
Okay.
The answer to your question is yes. So
Perfect.
XEXP is an ETF. It has a number of emerging technology as well as other companies within it. So yes, that is the answer to your question.
Yes. Thanks for joining, Olivia.
Not a problem.
And I'm going to unmute.
No worries. I think I'll give you is it okay if I use an example to answer your question? So what is the difference between using a Megatrends ETF highlighted on this slide here versus saying buying the S&P 500? So for example, if we take Google, the reason why Google isn't included in exponential technologies is really this. So Google, if they have a breakthrough in cloud computing or 5G, it's really a small portion of their revenue. When we created these Megatrends ETFs, these are going to be, smaller companies, global exposure in nature, but these are companies that are deriving the majority of their revenue from those particular areas. So, for example, a smaller cloud computing company, if they have a breakthrough, that's going to make a bigger difference in terms of their revenue and in terms of their profitability, because it's all they do. So that's why that would be included in something like exponential technology versus the S&P 500.
Yeah, so it's a much more focused selection, which gives you that more oomph if that sector does really open up. But good questions, Zakia. And I think this might be the last one. Richard, welcome, sir.
So I'll provide a bit of color on fees, because I think this comes up quite a bit. The reality is, at iShares specifically, we review our expense ratios to remain competitive with our competitors and in the specific marketplace that we're in. So when we launched the 4 newer Megatrends ETFs denoted in yellow, we are priced actually lower than our competitors in that particular segment. But when I'm thinking of building out a total portfolio, Richard, for you, combining, broad market, say, S&P 500 exposure with a slice of megatrends. I think that when you think about the kind of the cost of the total portfolio, your megatrend ETF may cost a little bit more, but you're probably going to have a larger allocation to things like, core U.S. equity, core Canadian equity within the iShares suite. Those are our low-cost leaders.
Yeah, and if I'll add one more thing, it will come down to value for money. There's three things I try to help people to navigate and to understand when we're looking at different options. The cost, the return, and the risk. And we're trying to find that balance between all of those and that compromise, because you also have that bit of a relationship with, a higher, lower risk, usually lower cost, usually lower return. So I'm going to pick on, let's say, GICs, right, or savings account, very low cost, very low risk, typically lower return on the low end of the spectrum. And then you go all the way up towards stuff that typically a higher risk usually provides a higher return and usually costs, it's more expensive to navigate those sort of elements. So is one better than the other? No, not really, because not everybody should be going into the high risk and, let's say getting a very specialized ETF or specialized industry. Some individuals, they may need to be in the low risk end, right? Based on their situation, based on the stage in life that they're at. For that one particular person as well, things might evolve. So for person A, at a certain stage in life, one element of the spectrum may make sense, and as they go through different stages, their needs or their wants will also change. So really looking at all those at every stage is key to then sort of understanding, okay, am I willing to pay this much or pay this little for what I'm getting from it? And it's always going to be that sort of balance. And maybe it's a mixture. Maybe we're looking at, one, not putting everything in a portfolio towards these sort of strategies, but it might be, okay, you've already been invested in a broad exposed sort of ETF. Let's complement it by going a little bit more deeper into something that you are very interested in, right? And it's not necessarily to say, well, let's blow up the portfolio that you've got in an, broad market exposed to the S&P. But if there's one theme that might really resonate with somebody, well, you can use that ETF to go a little bit deeper without saying, okay, I see the value of electric cars, I'm just going to buy Tesla, right? This is another way to then say, okay, how do you get exposure to this in a more, risk managed way, and to complement what an existing portfolio. So I think that's how I look at it. We look at things as not either or, but sometimes it could be an and. Hopefully that sort of answers how you could look at it in terms of an approach. And with that, I think I do want to really, really extend big thanks again to you, Jacqueline, for a lot of good info, a lot of food for thought for myself, for everyone. I think the conversations are going to continue. I hope everybody in this webinar will do some research and look into, there is a website for RBC's iShares Megatrends, more resources there. It's a continuous learning. And that's, again, kind of brings me back to the idea, the philosophy behind these webinars. And these are the ones that will be coming up next month and in March. So I'm bringing it back again, retirement elsewhere. U.S. Sunbelt, I did that last year for the first time, retirement elsewhere. We looked at Belize and Costa Rica, and there were some people that said, really liked it, but by the way, Orlando, how about the U.S.? How about Florida? We're curious to learn more about that area. So that will be February 22nd, and then in March, for International Women's Month, we're looking at Women Wired to Invest, is what we're going to be looking at. And others will come as well. So stay, keep up to date with the different topics as they come. And call to action is one, to take some form of action. Sometimes the challenge that we all face is a bit of information overload, analysis paralysis. I always try to encourage people to just make sort of small incremental improvements, right? So again, That's that same approach where you're looking at, okay, where you're at right now. I wouldn't recommend to anybody to say, well, from tonight's conversation, blow up everything that you've got and just, do this new thing. Look at small incremental changes and how to complement what you're already doing. Speaking of complement, don't hesitate. I'm always willing to have a meeting, have a chat with somebody to sort of look at, well, what are you doing right now? Where are you positioned on your chessboard? And what moves were you going to make? And if I can highlight a few other moves that you could explore that could bring you to checkmate a little bit faster. And usually if I don't know, I typically will know somebody who does or find somebody who does. That's just how I look at things. So I try to make sure either I know or I know somebody who does. And then we can kind of, collaboration again. And again, those are the three pillars. These webinars are focused on education, empowerment, and execution. So with this information, it allows you as an individual to feel a bit more empowered about how to navigate and how to make an informed decision. We never really will have perfect information, but you want to have sufficient information to then make a decision and not be necessarily steered into inaction, because that in and of itself is a decision that doesn't always necessarily work towards one's best interest. And finally, process to everything. There's that's an important thing to me, important thing to people that I work with. BlackRock, iShares. There's a process to how they go about researching and analyzing these sectors. There's a process to how I go about helping people sort of reevaluate where they're at. And I'll be happy to connect with anyone who is open to our conversation. And with that, bid farewell. I will hang around for a little bit just for that Ask Me Anything segment. And Happy New Year again, 2023. All the best, that it's a safe and a productive one. Thank you very much. And thank you so much, Jacqueline. Really appreciate your time today.
Thank you, everyone, for attending.